Hello and welcome to Tutorate, guys. So today we are going to cover a case study of Franklin Templeton, guys. Now, before we begin, just a very brief history is, guys. Franklin Templeton was actually a company which is based in New York. So it came to India in 1996, and then it formed a AMC division for investing in mutual funds, guys. Okay, so what happened was for the past 25 years, Franklin Templeton is performing really good, and their stock is also being traded in the stock market, and it uses the symbol of BEN. And the reason behind that is, guys, very simple. They uses BEN because it's like a dedication to Benjamin Franklin, and that's why they use BEN as their symbol. So what happened is that what happens in the market is that if you invest in debt mutual funds, what happens is the company buys various commercial papers and various corporate bonds, guys. And what happens is the company might be willing to increase their want some capital, and they just don't want to raise equity anymore, and they don't want to take loans from the bank as the interest rate might be high. So what they do is they simply issue corporate bonds, and people can buy it, and once the people buy it, they give monthly or yearly premiums till the final amount is completed. So this is how it goes in bonds. But what happened in Franklin's scenario is that the six mutual funds that have been closed, the six debt mutual funds that have been closed, particularly invested in corporate bonds which were below the AAA rated bonds. Now, what is the benefit in investing in below AAA rated bonds? Is quite simple, guys. So it's a basic phenomena. Everyone is aware of that. Higher the risk, more will be the return. So if I invest in AAA bonds, which means that I have like 100% close to 100% surety of me getting my money back, then of course the return will be very less since I'm playing very safe. So what Franklin needs to do is they firstly, people is getting a wrong idea here is that Franklin is going to dissolve. That's not going to happen. Franklin at current moment also have 12 or 11 other mutual funds that are based on debt, and they also have equity holdings as well, equity mutual funds as well. It's a very big company, guys. It has only closed those six mutual funds in which it used to invest in securities which were below AAA rated. Okay, so what happened is that as the time progressed, guys, what happened is they invested in certain companies, guys. They invested in SL Group, and they invested in SL Group, and they also invested in Vodafone Idea. And once what happens is that if they issue corporate bonds and if they are not able to repay it, that causes kind of a panic amongst the investors, and it also causes a bit of a disruption in the functioning of Franklin Templeton. If you think about it, because my business as a AMC is to get money from the corporate bonds that are given to us by the company, take my share of asset management fees, and give the leftover to the investors. So that's how it works. But if the company is not paying me the amount, I can't do anything about it, but I have to pay something to my investors. So this carried on. They made some investments, and the COVID-19 scenario also promoted towards this thing as well. They invested heavily in the energy sector, but the scenario as a lockdown, the commercial supply of electricity went very down, and because of that, the money that they have invested in the power sector was not able to provide them with enough returns to give the money back to the investors. So this happened, and this caused a series of redemption, guys. Now, what happens in redemption is that if I have invested my money in a mutual fund, and if I hope that in the future the mutual fund gives me certain amount of return till the time I've invested my money in the mutual fund, but if like I see that they are not performing well, I want my money back. This is something that happens in a mutual fund. Okay, so now what happened is redemption started, and this started way back in March, and even before that as well. Redemption started. People decided to take out their money from Franklin Templeton. They did that on a continuous basis. Now, one thing that we need to understand is that firstly, Franklin Templeton was not able to sell the bonds that it already hold, which were below AAA rated. But that doesn't mean that they don't have the bonds of AAA rated. They had the bonds of AAA rated, and they sold them in the market, and they got returns from it. But what happened is they sold the bonds at a discount. And why at a discount? Because they wanted quick money so that they can pay out to their investors. So what happened in this scenario? They earned a loss, they booked a loss, but that was fine since they wanted the investors to be happy. This redemption pace increased, guys. It increased and increased and increased, and they had no options to sell more and more AAA bonds that they have, and they also had to, sell various other securities to pay the redemption money back to the investors. But after a while, what happened is they were out of their AAA rated bonds, and all they were left with was the bonds that were below AAA rated. Now, at this scenario, a company would be worried, and because the redemption rates were increasing, so they thought that we need to sell these bonds as well. So what they did was they started selling these bonds, but due to tight liquidity in the market, people were not ready to buy these bonds. And it's quite clear why people were not willing to buy these bonds, because during the tight liquidity phase, I would want to invest my money in a sure short thing, and these are AAA rated bonds. So people were like, we won't be willing to invest in these below AAA rated bonds, and that's why they were not able to sell the bonds that they have. And as a result of that, in on 23rd April, they decided to, guys, reduce. They decided to close the close the fund, six mutual funds that we're talking about. And what entails for that is that no one can now withdraw their money from the fund, even if like the person wants to withdraw some sort of money for him or her to use during a personal saving during this time. They can't do that. The funds are locked. And now the question again comes to us, like, if the investors are going to get money or not. That we will answer, but firstly we need to see and we need to go a bit deeper into this concept. So I'm using this third party site, Money Control. It's a very good site, guys. Sorry, Economic Times at the moment I'm using, and it's a very good site, okay, for you to understand everything. So the six mutual funds, as you can see, the six mutual funds were closed down by Indian arm by one of the biggest funds houses. Are neck deep in the sectors they have been in the news recent time due to negative reasons. Like I said, guys, they have invested funds in various sectors which are not performing well. And someone might even say, why did they invest in this sector? But I'll give you the answer, because in mutual funds, people invest for the long term proceedings. They invest so that they can invest in long terms. The fund managers invest for the long term gain. So now what happens is that when they invested in this, the sector was performing good. But then various kind of news happen, various kind of frauds happen, other things happen, and because of that they realize that they have exposure in various sectors which are not going to perform good in the near future, and that's why they lost their money in those particular sectors. As you can see, the funds have exposure of 14,000 crore approx in non-banking financing companies, and power sector of 5,000, infrastructure, and the combined cost comes out to be 23,000 crores, guys. Okay. So now, as you can see that we can see various kind of things that NBFC are lenders to the high risk space to residential home. Bank are not very keen on lending, so they invested money in those companies where banks were not keen to invest money. So this is one thing that raises a red alert around the mutual fund. Okay, and see, or we can see more things that comes to us, and as you can see that. With the lockdown, demand for power has dropped, like I explained it to you, has dropped sharply as the commercial establishment are shut. This will impact the revenue stream of distribution companies, says analyst. At this stage, the liquidity pressure are certainly tightened for discoms. They are the main counterparty for the power generation companies. This is likely to translate into liquidity crunch for some of the generators. So, to explain it to you in a very layman term, what happened is the sectors in which they have invested have tight liquidity at the moment. What is tight liquidity, guys? Liquidity simply means that if I have a security, I can convert it into cash and use it for my own purpose. But if I have securities and there is no buyer, or there is see, I'm the seller, so if there is no buyer in the market, that means there is no liquidity for the security that I have, which means I cannot convert it into cash. So at the moment, the same scenario is happening with Franklin as well. They have the product, they're willing to sell it, but at the moment there are no buys in the market. It's not that the fund is closing or the company is closing, because they have other lots of mutual funds out there. Some are dealing in equity, some are even dealing in debt, and they're performing good, they're performing well enough. The only reason that these six funds were closed is because they have invested in the bonds which were below AAA rated, and people invest money in this because higher the risk, higher will be the return. So this is something that, and the question now that comes to me is that will the investors be able to receive their money in the near future. So that is something very uncertain. The the statement that are given by the officials of Franklin is that they will pay as soon as they recover the amount from their bonds and everything. And they're right as well. So what they have done is they have said the investors that once the amount is recovered as the payment is being made by the company, they'll slowly and slightly give the money back to the investors, which sounds again fair. But the question again arises is that will those company pay the return back to Franklin, and who will in turn pay the returns back to the investors? The other thing that Franklin have been doing is that they are selling their securities. They're selling the securities so that they can earn some money and get some money back to the investors. But again, during this COVID-19 time, the liquidity in the market is very tight, guys. There are no buyers. There are lots of sellers, but there are no buyers. So again, the question that if will the investors be able to recover their money in any time in the near future? I don't think so. It will approximately take more than 6 months for them to recover, and it also depends on how the economy functions when this lockdown period gets over. So this is a very uncertain scenario at the moment for every investors who have Franklin Templeton. But another advice to all the investors who are going to watch this video, there is no need, absolutely no need to panic at the moment and take out their money from other debt mutual funds, because other debt mutual funds are performing really good, not bad. Even Franklin debt mutual funds, other mutual funds are performing good. This happened in this certain mutual fund, and the reason is that they invested in companies, they invested in sectors which in future were not which in the future didn't perform well and was not able to provide them with the returns. As one can see that they have even invested their money in Reliance Communication. So we all know what happened with that. So again, there is no need to panic at the moment for the investors who have invested in their money in Franklin. All I can tell them is that they can only hope that the money that Franklin have is they are able to recover through other investments that they have, and this is how something it's going to happen. But again, for all the other investors out there, there is no need to panic, absolutely no need to panic at the moment, because panic will only create a negative impact for the economy at the moment. Where you have invested your money, keep your money safe there. Nothing is going to happen to your money. Other debt mutual funds are performing really well, and that's my advice to you guys. Thanks for watching this video. If you like other content related to finance, do subscribe the video. We launch a new video every week for you guys on various topics as well. Thanks for watching, guys.